Fly to the moon. Hello, guys. We'll just give it another minute, then we'll start. Okay, we'll go ahead and start. And I guess those who are going to be late, you can just ask question later on. Teresa, are you there? Okay, guys, I will go ahead and start. Okay, basically, Teresa, she did an outline how we're gonna go about it, but of course, she put too many
Hi.
things. Hi,
Hi,
Teresa.
Mr. Abdullah. I'm here. I just
Hi, how are
did.
you?
Yeah,
Okay,
I'm fine.
yeah,
Thank
anybody
you.
wants to ask question while we're talking, they can just unmute and ask the question, okay? So it's okay, let's make it
Sure.
an informal meeting today. Uh, basically, okay, we'll go about understanding how the market works, okay? So basically, you guys need to understand that the main participants in the markets are like the big banks, which is, they call them the big boys. And those are the guys who really create the volume in Forex, in future markets. Of course, in the crypto space, we have the guys, they call them the wheels, you know, like the big players. And those are the guys who create the candles you see in the chart. Okay. So basically your job is to understand who is in command, whether it's the buyers or the sellers. And based on that, you make a decision whether you're going to buy or sell or just stay in the sideline. Okay. So this class, basically what I'm going to do, I'm going to be teaching you how to read the chart and how to use something called market structure and price action. Okay. We're not going to be using indicators. We're not going to be relying on, because most of these indicators that you can see in the trading platforms are always lagging. So they will give you always late information to make a decision. And of course, you know, most of the retail traders who rely on indicators, they end up losing. Okay. So they call them chart patterns. You know, these things that happen in the chart, you got to understand and learn how to spot these chart patterns to make the decisions. Of course, there are 28 chart patterns that you need to get familiar with. You know, most of these chart patterns are like continuation. Only 4 of them is reversal, like when the market is changing direction. So therefore, it is going to be a key for you guys to learn those chart patterns. So the class is going to be hand-on, and I'm going to be teaching you one pattern at a time. We'll go over it, we'll give examples, and then, you know, you go and do some practice training so your eyes can spot that pattern. So next time when you're ready to trade, you can do it, okay? Of course, that's going to require works from you guys. It's not going to be like I'm going to be teaching you something and then you just go and start to trade. Because you know, I don't want to give you like a misleading promises or information that, yeah, I'm going to teach you about how to trade, and then the following day you're going to look at the chart and you're going to trade yourself without doing any work. So basically, to be a good trader, you got to understand is work. It's like in anything else in life. You got to do the work first, master the skills, and then from there, you know, I mean, the trading and the money will come. Okay. So, you know, there are one things about why most of the retail traders always end up losing in the game. Because, you know, they lack one of the 3. Either they don't have the skills because they just go and fund their accounts and start to trade, hoping that they can make money because somebody told them that this is a market where you can become rich, you know, I mean, in no time. And of course, all these schools promising you to teach you how to trade, and you're going to become like rich and you're going to make money very quick. All this brokers advertising how easy, you know, to make money in the, you know, trading space. And the reality is, it's not easy. You know, you got to learn. So the first thing is you acquire the knowledge, and you hone and you improve your skills. And also the second one is money management. Money management is mean like, you know, I mean, it is the size of the trade in relation to the amount that you have in your account. So like if you have a small account, your size has to be small. So there is money management is like key for your survival and for your success in the market. And the third one is risk. Risk is like how much are you willing to risk in a trade in relation to the fund that you have in your account. So of course, you know, I mean, if you start to play trades with high risk, eventually you're gonna lose your money from the account, and you're not gonna be in the market, you know, to learn and to make money a little bit, and then, you know, you just hone your skills and you become like a good trader. Okay. So these 3 elements, most of the traders, they miss. Like, for example, like, a trader might acquire the knowledge and the skills, but then he will fail in the money management and the risk. Okay. Another trader might like acquire the first two, but then he will become a risk taker and he takes so much risk in the trades. So eventually he will lose. So it's the three things that you need to know and to master. And, you're going to develop this by really being like disciplined and following it literally in every trade. You miss one of these three, you're going to have some issues, okay? And by the way, this applies to any market. It's whether it's a stock, options, futures, forex, crypto is the same thing. These three things apply to all the markets. And when you learn about the chart patterns and about the market structure, also that one applies to all the markets. So it's not like, you need to acquire some skills to trade cryptos, which is different than from trading forex or futures or stocks or options and in any other, trading instruments. So the skills apply to all. Okay. Like, for example, like, the chart that you see the chart, right? I'm sharing with you the chart in TradingView. Teresa, do you see the chart? Guys? Somebody tell me. Yes, huh? You see the chart? Teresa?
Yes, I saw it.
Okay. So basically, you guys, you're going to need to create an account in TradingView. I'm sure some of you already have that. And this trading platform, chart platform, is free. You can get it for free, or you can get a paid subscription. It's just basically the paid one. They give you more features and they allow you to open more charts, but it's not needed. At the beginning, you don't need the paid one. You can just get like a free one. Okay. And the reason being because TradingView, they will provide data for futures, for stocks, for forex, for crypto, and it's free. And they give you like, accurate data, and they have a lot of tools in the charts. So it's basically it's a good one to use, Okay, that's the first thing that you will do. I'll provide you the link so you can just go and subscribe for free. Okay. Okay, so what I'm going to do today, I'm going to just explain to you a few things about how to read the chart. Okay. So I'll just go like with like two basic tools that you need to know. One of them is like basically identifying support and resistance. For example, like you see, this one is the Euro JP, Euro Japanese Yen. And basically, like, if you want to trade this one here, whether you want to buy or sell, because, in the Forex market, for example, you can go long and you can go short the pair. Like similar in crypto, but if you have like future accounts, not spot. So basically, one of the chart pattern that you need to understand in the beginning is basically identifying like support and resistance. Like, for example, here, like, let me show you. For example, like, let's see, we pick up Euro JP. So we need to identify right now, this is like in the daily time frame. So I come here and I say, okay, in the daily time frame, the price has a support in here, and there is a resistance in here. I mean, you can use this one here, okay? So we know that when the price is going up from this support zone, you notice how many days kept going up. It went 2 days and then 2 days, you know, down, and then just continue until it reach the end here and it started to go down. So therefore, like, you know, when you identify support and resistance, it will tell you where the market is heading, and then you will take the right decision. Like, for example, when it's going up, you will be buying. When it's coming down, you will be selling. So which means that when you sell, you're selling euro and you're buying Japanese yen. When you buy, you are buying euro and you're selling Japanese yen, okay? So therefore, after you do this from the daily, you will go to the 4 hours, and then you will identify something called the market structure, you know. Okay, is the market is going, making higher highs or higher lows, or is going doing like lower lows, lower highs and lower lows, okay? So by identifying this, only these two lines, it will help you not to go against the order flow, which means that when the market is going up, you are selling. Of course, you're going to be losing because, you know, I mean, the big boys, like the bank traders, they decide that from here, they're going to be buying. So therefore, you know, you have to buy with them. Of course, when the market retraces like this, people who bought here, they want to lock their profit here. So they will get out. They will get out of their long buy, and then they will sell to bring the market to 50% of the move, sometimes 38%, because they, I'll teach you how to use like Fibonacci levels and sequence to identify when is the time to buy again. So, you know, they make the drop, they lock their profit from this area to this area, and then from here they buy again. And then they made this move. Then they drop again. Then they made this move. Then they drop again. You see, I mean, it's like rinse and repeat. So when you understand this, it becomes very easy for you to trade. Because, you know, I mean, the movements of the candle start to make a lot of sense to you. Because, you know, I mean, if you are not familiar with Fibonacci, Elliott waves, wave analysis, chart patterns, the movements of the candle, it's like gibberish. It's just to understand why the market came here and come here. Why the market, you know, I mean, a lot of times you're going to get confused and you're going to get, you know, you keep wondering how come, why it's doing this. But, you know, I mean, every single move in the market is based in math. It's not random. So therefore, when you master that things behind the candle, trading become easy. It's no more like something like strange, something like, you know, I just cannot read these candles. I don't know what's going on. How come, you know, Bitcoin, you know, it came to this point and then went up? How come, you know, Ethereum, you know, like when you are trading other cryptos? But when you understand the market structure and when you understand how to read the chart, then everything can become easy and it makes a lot of sense to you. Okay. So therefore, you know, it's like the chart has a language, and this language you need to master to be able to communicate with the chart. Okay. So this is like another, you know, chart pattern that I will teach you. Of course, this is like a 4 hours time frame. You will be trading using like 1 hour. So you see, like we're doing like a top-down analysis. We started from the daily, then we go to the 4 hours, then we go to the 1 hour. And we base our trade entries in the 1 hour. Of course, I'm talking about like, you know, for example, in the Forex market, because the bank traders who create the candles, they only use 1 hour to trade time frame. They don't use like 30 minutes, 15 minutes, 5 minutes. Only the retail traders, they use these short time frames, and it's very misleading because every time you go to the shorter time frame, the chart will give you, misinformation. It will show you like it's a good time to buy, but in reality, the big boys are still selling. So therefore, you should always look at the time frame that the big players in the market are looking. Because if they are not looking at, the 5 minutes or the 15 minutes or the 30 minutes, therefore for you, you should not pay a lot of attention to these time frames. Of course, you can rotate between 1 hour, 30 minutes, but always you make your final decision based in 1 hour. Okay. So this is like another thing that a lot of retail traders, don't follow. And by the way, most of these educators who charge a lot of money, they will teach you a lot of theories and a lot of things that's not going to work and it's not going to help you. Okay. And believe me, I went through this. I paid a lot of money. I attended a lot of classes in US. I attended, I paid a lot of money to these US traders, gurus. And yeah, they have like books in the market, they come in TV, they're very famous, but they always will teach you like bits and pieces, and they will never give you a whole picture of how the banks trade. Until I learned it from somebody who learned it from banks. Because, you want to learn how to trade, you got to learn how the banks traders do, which is the big boys. And it was an eye opener for me because that guy really showed me how the banks trade. And from that moment on, I followed what he asked me to do, which means that I did all my work. I did the, the homeworks. I did all the chart patterns, and then things become like easy. So I can look at the chart and I can identify when it's time to buy, when it's time to sell, when it's time to sit in the sideline. I can identify like when the market is going up or when it's making a retracements or a pullback. I can identify targets. And, I'll just show you here. Like, for example, like Bitcoin here. I've been identifying targets for the past 7 years for my followers in Telegram and in YouTube and also WhatsApp. You see, this is like a chart for Bitcoin. And I identified all these targets ahead of time. And I only rely in market structure and price action. I didn't use indicators. Sometimes I will use the MACD, which is one of the indicators I use just to identify for me when the market is doing convergence or divergence, which means that convergence when the price is going up and the MACD, which is one of the leading indicators, is going up. Divergence basically is the opposite. It's like when the price is going up, but the MACD is showing that weakness in momentum. So I only use this for this, but I don't base my entry using like MACD. So I always like, go back and just use price action. Okay. So therefore, after, if we go through the class, I will be teaching you the skills that I have, which is like when you look at the chart, you look at the Japanese candle, naked chart, you can identify how to trade. You can identify the time to get in, the time to get out, the time to stay on the sideline. Okay. This is like a US dollar, Japanese yen. I'm just showing you, this is like my analysis here. You see what I do? I just identify the, day top and bottom. Then I use like the Fibonacci, which is a tool that is provided in all the charting platform. You see, it's here. It's just basically, anybody can use it. See, Fibonacci retracement. I can just drag it from the beginning of the move to the end of the move. Then it will tell me where the market might make a retracement to. You see here how the price just went here and then it dropped to Fibonacci 21.4, 38.2. You see how accurate just by using this tool. Sometimes it will drop to 50. Sometimes it will drop to 618, which is the golden ratio in Fibonacci. But when you draw just only this tool, the price, you see, like when I delete it here, okay? I just remove that tool that I just showed you right now. And then you see the price came all the way here. Then it dropped. But you see, notice it came here and it started to trade sideways and it's attempting to go up. You keep wondering yourself, how come? Why the price stopped here? What made it stop? Why did it not continue to go down, down all the way to here? Easy, you know, you just go and you draw the Fibonacci retracement and voila, you see? It's a Fibonacci level. Okay? So there is no magic about reading the chart. It's just a matter of applying the right tool correctly, practicing that tool to master it, and then it becomes very easy. Okay? See this? This is one of the tools that I'm going to be teaching you. Another tool I will teach you is this one here, trend channel. This is like, it's based on the something called like wave analysis. I mean, a lot of schools, they're not going to be teaching you this one. But this is like very, very powerful because, you know, the price moves in waves. Okay. So when you do the trend channel correctly, you can identify where the price might go and where it's going to retrace. And for example, you see here, like we have an upside leg. It's going from the daily bottom and it's attempting to go to the daily top. But you notice how the price came to this line and then went up again. How come it came to this line and come back again to this? And you see, it's like this trend channel is working as a magnet. You know, it's like holding the price. Of course, sometimes they will go behind it, pass it, but they will come again. So just by using this tool, you will be able to time your entry correctly. So if you know that the price, you know, came here and went up. Okay, you see this in the trend channel, there is like 4 lines. Of course, I'll be teaching you, this is like, they call it the upper line, the lower line, the hard line, and the lower 25, the upper 75. Because as I keep telling you, you know, the price moves in the chart based in math. And there is like something, they call it like geometry and symmetry. Okay, so it's not like just a random movements. Okay, so it's just pure math. And, you know, there are tools that you master and things become very straightforward and easy. Okay, so now let's open the Q&A because we have 10 minutes. Okay, guys, so I'll you can just unmute your mic and ask question. Teresa?
Mm,
Yeah, guys, you know, I mean, just ask me any questions about the market, about, you know, I mean, you know, anything that comes to your mind, you know, I mean, it's, so. I mean, you can just say, okay, most of you are newbies, correct? I mean, you just started, you don't have any, you haven't been trading before, you know, it's just, it's going to be like from the beginning to intermediate to advanced, correct?
so, Mr. Abdullah,
Mhm.
the green light means increasing, right? And then the red color means decrease, going down.
Yeah, the candles. Yes. Okay. Basically, like when you look at the candle, because every candle here, this is by the way, they call it Japanese candles, and it's been used by the Japanese for the past 200 years, and they started using it to trade rice. But then later on, they apply this in the trading market for trading stocks, and so correct. You see, when the candle is printing red, it means that there are more sellers than buyers, and just the market keeps going down, 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 down here. You see here, when the price stabilizes at this level, we see more buyers coming in. So they start to buy, and you see this candle and this one and this one is with this one. The buyers, they were in charge. So the candle become green. Then you see here is a red candle. It means like some sellers came in and they start to sell. But then the buyers take over. Then the sellers take over. Again, they take over. Now the buyers, they take over again. And this time the buyers are strong. That's why you notice how the price kept moving like 1, 2, 3, a small red, but then continue up to here. And from here, because you see, if somebody bought here or here or here, when he gets out here, he makes a lot of money. So therefore, always the candle will show you the tug of war between the buyers and the sellers. So there is always a war between these two groups. And the stronger group, they will dictate what happened. And the other group will just become weaker and join them. You know what I'm saying? Because, like, for example, like if you are a seller here, and then you see the price stabilize here, and the buyers start to come in, you switch, you become, instead of a seller, you get out of your sell and you buy. And you join the buyer. And that's why you see sometimes the momentum will change, and then you will see like big buying, big buying. Why? Because, the sellers, they become buyers themselves, and you have new participants, new buyers. The same thing in the sell. When you see, like, when the market is going down, like, for example, here, you see this? You see how the market is going down? Then it moves sideways. Then it came down. You see, because all this big candle, red one, it means that a lot of people are selling. And when you see like a big green candle, you see like a lot of buyers are coming to the market. You see this? So the candle, the size of the candle, represent the strength of the group in charge. Because you see, when you see like this small green candle, which is, we call it doji. Doji, it means indecision. It's like, the buyers and the sellers, they reach a point that nobody can make a decision. So there's like an equilibrium. But then you notice when the buyers came back, they start to form this candle, this candle, this candle. You see, big candles, okay? And then it reached here, and they did like something called like a hammer, which means that the buyers, they are exhausted. So now they get out of their positions. And new sellers come into the market, and they start to sell. So now you have like two forces. The buyers are getting out from their buy, so they create volume in selling, and then new sellers comes in and they push the price down. So you as a trader, is going to be your job to identify this tug of war between the two groups, and who is leading and who is in charge. And if you just identify this one alone, you will win most of your trade. I'm not going to say like it's going to be like 100% winning. You're going to be doing like about maybe 70% win, which is great. I mean, if you can achieve a 70% win, or even 65, you will be like one of the best traders, and you're going to make money day in and day out. Because, the market is not going to give you 100% winning ratio, and you don't need that. If you can just get 65, 70, you are a happy camper. I mean, you will make money in the market, whether it is Forex or crypto or any other assets. Okay. Another question? By the way,
Hello,
I mean,
hi.
go ahead. Hi.
Yes, I have a question here.
Uh-huh.
Yes, I'm CL, and I just wondering if, let's say, for junior, like newbie like us,
Uh-huh.
what are the few trading pattern types that we should know from the start now? Because as you mentioned just now, there's few of them now. So for us to understand the market trend,
Hmm.
so what are the few types that we should know and start to practice from time to time?
Okay. Well, as I told you, my approach to trading, to teaching you how to trade, I will teach you from the basics, from identifying, from reading the candle, from understanding the chart patterns, and it's going to be tools that I will teach you one tool at a time, because I don't want to, give you so many things at one class, because it's going to be too much to digest. Because, as I told you, there are 28 tools, but if in every class I teach you like 5 or 6 or 7 tools, you're going to be dizzy. You're going to say, wait a minute, I cannot absorb this information. Therefore, we'll go like from one tool to another, and during your free time, you're going to go and do some practice for that tool to reinforce that knowledge in your brain. Because you see, the chart patterns only can be identified live if you do the homework, and you repeat that particular patterns a lot of times, so that your brain can see it live without even drawing it. Okay. So therefore, this is going to be a hand-on class, and it's going to require from you to participate with me, because that's what I'm saying. Like, it's not going to be something I'm going to teach you and then voila, you're going to go and trade. You got to go and do your work. So, but I'm going to be teaching it in a way that I'll make it very, very simple for you. By we pick up one pattern at a time, we go over it, we give a lot of examples, I show you live, and then before we come to the second class, you will go and do the exercise, and then you come back to me in the following class, and that particular pattern is already clear in your head.
Okay.
Okay, because by the way, trading